This conference will now be recorded.
What's up, guys? Welcome back to the personal finance videos that we have. It's chapter 7. I'm Carl, CEO of G.A.R Capital. Let's rock and roll and keep it moving. Let's talk about credit cards and credit. Very, very important. So let's go ahead and talk about credit first, right? Credit score. What the hell is a credit score? What is a credit report? Talk to me, Carlos. What the hell is this stuff? Why is credit so important? Well, let's break it down. Credit is very important in your life, guys. Credit is basically a reflection of your responsibility when it comes to money and borrowing. No matter what in your life, you're going to have to borrow the bank one day, whether you're going to borrow for a home, whether you're going to rent an apartment, they're going to check your credit no matter what. Even employers do check your credit. We're going to go over those credit myths too. So let's go over the FICO score. What is a FICO score? Well, FICO is breaking down as FICO, F-I-C-O, Fair Isaac Credit. I don't know what the O means, operations, I guess, whatever. But yeah, so FICO score is basically the number that you're based on. You're just a number. This means the credit borrower's credit worthiness. So what's the range of the credit score? It's from 350 to 850. 850 being perfect, 350 being trash, the worst. If you're at 350, good luck. You're not getting anywhere. So let's break it down. What makes up a FICO score? You can see my screen here. This is courtesy of myfico.com, a blog. Feel free to take a look at the link. And it's kind of break it down here. Your FICO score, 35% of your FICO score is your payment history. Do you pay on time? Are you ever late? So there's different types of late payments. 30 days late, 60 days late, 90 days late, over 120 late, meaning you didn't pay your car, you didn't pay your card, you didn't pay whatever those days. So if you pay your credit card within 30 days, you're not late, you're on time. If you pay over 30 days, that's a ding on your credit because that's late payments. Not good. Make sure your credit is paid on time. Anything you have debt, whether it's your mortgage, whether it's your car payment, whether it's credit cards, whatever, make sure you pay it on time, guys. Amounts owed. How much debt do you have based on amounts available? That's important. So again, amounts owed. If you have a $1,000 credit limit with a credit card and you use it up to, you can use up to 1,000, but if you use 900 of it, that's 90% of your amounts owed. Not good. You want to keep it below 30%. So always keep that in mind. If you have multiple credit cards, kind of spread out the love a little bit. I wouldn't recommend multiple cards unless you need to. We'll go over that with the credit cards section here in this part. But amounts owed, again, they don't want to see you using every single bit of credit you have. Again, it can be a risk to them. So again, amounts owed, percentage. Again, don't constantly exceed your credit limit. That's a potential risk. So always keep low credit card balances or zero balances. Obviously, you're not going to have a zero balance on your car loan, so they don't look at that. They're talking about revolving, which is a credit line, like a home equity line or a credit card. 10% new credit. How much new credit have you got? Kind of a small slice, but part of it. 15%. How long have you had credit? Less time, it kind of hurts. Longer the time, the better. That's why older people usually have better credit. New kids, 18, 20 years old, that's gonna kind of hurt you. And 10% credit mix. You have mortgage, do you have a car payment, do you have credit cards, do you have lines of credit? That's the credit mix, very small slice. The most important stuff, 65% of it is you're paying on time and how much do you use. So keep that in mind. Always pay on time. I can't stress that enough. Don't try to max out every single time you have a credit card. Not good. Your credit score will go down. And it always takes time to build up your score, guys. It's all about time, just like anything else. It's time. Pay your cards on time, pay your credit on time, pay your bills on time. You'll be fine. Try not to apply for too much credit because every time you apply, it gets a ding. It's called a credit hit. If you apply for something, if you're denied, it's a 10-point hit. If you are approved, it can help you because it increases how much credit available to you, like the amounts owed. So again, if you have a $1,000 credit, $1,000 credit line with Macy's card, and you use $900 of it, and you apply for a Wells Fargo card, and they give you another 1,000, your credit amount owed is going to be a lot less, meaning that instead of 900 of 1,000, it's going to be 900 out of 2,000. So it's right around 40%, around 45%. So again, it kind of helps you, kind of does it, but don't apply for things you don't really need. Understand that. Be protective of your score. And understand you can always check your credit score for free every single year by law through annualcreditreport.com. It's done by the government, and you can actually get a copy of your credit report and see what's true and what's not true. You'd be surprised. There's a lot of mistakes there. Make sure to fight it. If you find something that's not yours, it is your legal right to write a letter to the credit bureaus, Experian, Equifax, TransUnion, and let them know this is not mine. I did not sign for this. If it's yours, you are liable for it, guys. If you got a Best Buy card and you racked it up and you decide not to pay, it is yours. If someone opened an account under your name, it happens all the time. It could be mistakes. Mistakes happen. You can write a letter and tell them this is not mine. Make sure to sign it and send it out to them. And they'll go ahead and remove it. It'll take some time, but it's very, very important, guys, to check your credit because this is your lifeblood of your finance. You're always going to borrow money. We're going to borrow money one day. So make sure that your credit score is on point. We can go and look at credit score range, and we'll see what's good and what's bad, and so on. So what is a good credit score? Perfect. Bring it up. Okay, so let's break this down. Remember the FICO score. 800 to 850 is exceptional credit. You're considered prime. You're going to get the best interest rates. Everyone's going to offer you money because you obviously pay on time. You don't rack up a lot of debt, and you'll be good. 740 to 799, again, that's not bad. That's pretty good. You're talking about the majority of people are around the 740 to 799 range. So keep that in mind. 740 to 799, that's very good. You're not going to get the prime rates, but you'll be pretty good. You'll be pretty set with good rates on cards, cars, and mortgages. Good, you're right in the middle. You're at 670 to 739, again, pretty good. You're probably the second highest bracket, tied with the exceptional. About 8% of applicants in this score are likely to become seriously delinquent in the future. Higher the score, less likely risk to be delinquent or to not pay your bills. Next is fair, which is around 580 to 669. Applicants in this range are considered subprime borrowers. We know the word subprime, right? From the Big Short and the financial crisis. These people were getting mortgages they couldn't afford. 580 to 669, you don't want to be in that range. You want to be anywhere above 740 or above, usually, so you get the best rates. And very poor is 300 to 579. So 300 to 850, that's your range. You don't want to be around 300 to 579. 16% of the people in the population of the United States have to either pay a fee or deposit, and applicants at this rating may not be approved for credit at all. You may just get declined. Anything below 640, I would say, you're probably going to get declined for stuff, unless it's a secured credit card or a subprime loan or a subprime card. If you want to get a car through Drive Time, for example, they don't check credit or they'll accept bad credit, but you're going to pay very high interest rates. So it's very important to keep on top of your credit score, guys. It's very, very important. This is your financial blood, let's just say. Let's go over the credit score myths that everyone gets flown around. We're going to debunk some. Number one, checking your credit hurts your score. False. Using credit monitoring service will not hurt your score how many times you check it. You can pay, sometimes credit cards do have FICO score for free, and you can check your credit score whenever you want. And like American Express does it, I think Citibank does it, Chase does it. They offer it for free for credit card holders. And you can check your credit score as much as you want. Again, use it to your convenience. Annualcreditreport.com, you can use it once a year, and that is free through the government. Next score myths. You have to make a lot of money to have a good credit score. Not true. You can make 30 grand a year and have a great credit score. You can make 300 grand a year and have a horrific credit score. It really depends on how much credit you have, you pay your bills on time, and how long you have credit. Next one, employers will check your credit score. Not really. They'll check your credit. They want to make sure you don't have anything bad on you. Like, for example, a broken lease. You don't want a broken lease of your apartment that you live in. That doesn't look good in a responsible way. So again, employers are going to see that, is this person trustworthy? Can he handle his finances? Very important. Next one, closing your credit card will improve your credit score. Actually, it's the opposite. If you close your credit card, especially one with a balance, can hurt you more than it helps. Leaving accounts open, particularly ones in good standing that you've had for a while, just helps your credit score, if anything, because it adds to the time. So let's say you have a credit card like with Capital One and you've had it for like 10 years and you barely use it. As long as it's not an annual fee, just keep it. Just keep it in your drawer or safe, as long as no one uses it, but because it's going to boost your credit. Next one, a bad credit score will last forever. Not true. Just so you know, if you have a bankruptcy, it takes 7 years to be discharged. It will not be in your credit anymore after 7 years. If you have something that was filed as write-off, meaning you had a credit card, you didn't pay it, you didn't care, and you let it go, 7 years, it will be removed from your credit score. So 7 years is a long time. Just understand it doesn't last forever. Debit cards help build a good credit score. No, debit card has nothing to do with credit. Keep in mind, debit card, prepaid cards have nothing to help with your credit. Understand that. There's a secured credit card, which we'll go over. That helps your credit, but that's a whole different ballgame. But debit cards and prepaid cards, like from Walmart, that doesn't do anything for your credit. Remember, debit cards, like we talked about, It's just coming out of your checking account. Next one, you should only check your credit when applying for a loan. Not true. Ignore that. You can check your credit score whenever you want. Again, you want to be on top of your credit. Very, very important, guys. Again, like I said, this is the lifeblood of your finance. And the next one, paying off a collection means it won't hurt your score. Well, it's really about time. Although paying a collection meaning if you owe money and let's say you owe money to Wells Fargo's credit card, if you didn't pay them for 90 days, they sell that portfolio to a collection agency, and they'll start calling you and telling you nice things about paying them off. Well, if you pay them off, does it help you? Well, it comes off as debt, sure, but your credit score is still hurt. And if you don't pay them, your credit score is still hit anyway. So I'm not saying don't pay it, but it doesn't really affect the score. So again, if you pay it off, it can help you in the long run, but it's not immediate. The collection factors into your credit score, reporting time limit, again, 7 years that we talked about. If you pay your collection, manage your finances over time, you'll see your credit score improve. Again, but you don't want to be in collections. Not a good feeling, guys. You don't owe money. That's very important to be very cognizant of that. Don't owe money. Again, try not to get stuff in collections, guys. And again, guys, if you're late on anything, or you're going a little behind, you don't have emergency fund, some bad stuff happens to you, give a call to your credit card company, work with them, they'll work with you, and just tell me, listen, I'm going through some tough times right now, what can I do? They'll put you in a payment plan, your credit score may be dinged, but at least you're not in collections, and it's not, like a heart attack towards your lifeblood of your finances. It's just a quick hiccup. I mean, your credit score might get a little dinged, but again, you don't want to put yourself in that position because you have your emergency savings, right? Smart. So credit cards, they're not the worst thing in the world, guys. Actually, credit cards give you a lot of benefits. We talked about that with cash and versus debit cards and credit cards. So again, personally for me, I have a couple of credit cards. Some of them I use on a daily basis, some of them I don't. But again, I've had some for a while. But here's one example. This is American Express Delta Sky Miles card. I use this because I fly Delta, and they gave me some miles just to have. I keep a zero balance on it, meaning every time I use it, I pay it off within 30 days. It boosts my credit, so I'm pretty happy with it. My credit score currently is right around 775. Pretty great. I'm pretty happy with that score, and I want to protect that in the future. So again, you need to understand that if you use your credit card, the best thing is just to pay it off every month, guys. Use it like you use your debit card. Why do I use this card? Because American Express has great customer service, great consumer protection. If I buy something and the service wasn't that great, I can dispute it. Or if I buy something electronic and it breaks down, they give me an extended warranty. And plus I get miles for it. And I want to travel, right? We all want to travel. So here's some of the best credit cards of February 2020. Let's assume that you have great credit. There's some here like Discover. Cash back. You get cash back for every time you use your card. If you spend something for $100, sometimes they'll give you 5%, depending on the category. You get $5 back. Pretty cool. Sapphire Preferred card, they give you rewards. So you have cash back versus rewards. Rewards like points. Chase gives you points, and you can use it for travel, for electronics, or for gift cards, or what have you. Blue Preferred cash back. Again, that's just cash back, depending on what you use it for. For example, they leading cashback rewards for supermarkets. Let's say you have a big family and you will shop a lot at the supermarket. This is probably a good card for you because they give you the best cash back, and they also give you a nice intro offer. Here's a recommended credit score, 690 over 850. Friends at NerdWallet will break it down for you. Has an annual fee, like most American Express cards do. Try to stay away from annual fee cards, guys, unless you're really going to use it a lot. Just don't have an annual fee just because. So these are the best offers for February. Balance transfers. What is a balance transfer? Well, let's say you have a card like Capital One that's a high interest rate, let's say 19%, and you owe $5,000 on it, and you're tired of paying that interest rate. Let's say you have a really great credit score and you want to open a new card with a balance transfer. You can transfer that $5,000 to that 19% to a Discover card for 0% for 6 months. It's like them giving you a loan, actually for 18 months, and they'll give you a loan to pay that off, meaning they will write a check to Capital One to pay off that $5,000, and then they take it into their card, into your card now, and you pay it off within 18 months with 0%. The trick is to keep that, to make sure that you pay that off in 18 months. If not, it's just added more debt. Not smart. But again, they charge a fee for the balance transfer, 3% of the balance. But again, it's a great way to save some interest. Just make sure you pay it back. The last thing you want is to transfer the balance, right? And then you rack up more charges, and then you're in debt again. You're just robbing Peter to pay Paul. Not smart. That's balance transfers, and there's different ones out there that you can use. Another one is rewards. Capital One has some good rewards for rewards points, 2 points for every $1 spent. They give you 50,000 to sign up if you have great credit. There's an annual fee though, unfortunately, but they have no foreign transaction fees, meaning that if you travel outside the US, you don't get charged a fee for using your card. Sometimes you use a debit card, you get charged 3% of the charge because you have to pay in euros if you're in Italy, for example. So again, credit cards are great, especially when you're traveling overseas, because you get that protection. You lose your debit card overseas, you may not have a chance to access your money. So credit cards, again, like we talked about, that protection, very, very important. And of course, there's tons of other ones, here there's cash back. We talked about that, travel cards, you get points, you get miles, tons of stuff. Figure out what's best for you. Sometimes low interest. Low interest is pretty good if you plan to carry a balance. Your money is kind of here hit and miss because you're on commission. Low interest cards are probably your best bet because they're a way to carry your balance. But again, interest rates can be as high as 13% to 24%. So you got to just be careful. I'd rather you pay it off every month if you use it. Use your credit card like a debit card, but get the benefits of a credit card. So you get miles, points, cash back, whatever. Again, I have a cash back card with Apple. I have the Apple card. I have my travel points with Delta and American Airlines, and I have my American Express for my points. So I have all three, but they're all paid off every month. So again, it really depends on you being disciplined enough to use your credit card, not as a loan, but as a vehicle just to get rewards for stuff that you do every day. If you go out to eat a lot or something, or you need to pay your bills, just use your credit card instead of a debit card. Just make sure to pay it off every month. That's the key. So credit cards, guys, don't be afraid of them, to use them. They're very, very a good way to have benefits and rewards in your pocket. So let's say you have bad credit. How can I get out of bad credit? Well, you can go to secured credit cards. This is a good way to get started. So what is a secured credit card? Now there's something here that says you don't need a secured card, but this is a good one here. Secured credit card, friends in their wallet. What you do is that you give the bank $500 and a CD. You have to give them money. They hold it, and then they'll give you a credit line based on how much you gave them. So it's all secured, meaning secured with your money. So if you don't pay them, they keep your money, but it helps your credit score going up because you have it secured and they know that you can pay it every month, right? They're trusting you. So again, all this is for poor credit or no credit. So what you do, again, you want to stick with the no annual fee with these. What you do is that, let's say you have $500. You get $500, you write a check to Capital One, or you make a transfer to them when you apply for the secured MasterCard. More likely they'll approve everybody. And then they hold that $500, and then they'll give you a $450 credit line. They'll keep that $50 and $450, right? Let's say, for example, you didn't pay back that $450, they keep your $500, just so you know. But if you pay it back and you do this for over a year, your credit score is going to jump up. So again, don't feel too bad if your credit's a little low. You can have these ways to kind of boost your credit here and there. Again, secured MasterCard or secured credit card is a good way to get started. Start doing that for about 12 to 24 months. Your credit score will go up. Make sure that you're like we talked about with the FICO score, make sure your balances are low, make sure you're paying on time. And you do that over time, guys, your credit score is going to go up as always. Try not to rack up debt, pay off your stuff on time, be disciplined with your money. Don't start borrowing every single dime that's offered to you. If you get a bunch of letters in the mail, whatever, saying, oh, approve this, don't take stuff you don't need. Again, there's sharks in the water. Don't get bit, right? Again, if you want it, that's fine. If you need it, that's fine. But just because it's available, don't do it. Just don't do it just because it's available, because it hurts your credit score over time. Have that goal in mind every time you're moving forward, and you'll be fine with your credit, guys. So don't be afraid of credit cards, guys. They're a great way to make some rewards for your everyday spending. Just don't go crazy. Don't rack up debt for stupidity, and pay it off every month, and you guys will be fine. Thank you so much for joining me in this part of the chapter. I'll catch you guys for the next one.